good. The most you can make with this is $4.75, but the most you can lose is $25. I'm in that. Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And this is another segment of our top 3 option plays this week where we're just gonna go over a few different trades, stock fundamentals, and different strategies that you can do to make it through, okay? So if this is your first time watching this video, please make sure that you click that thumbs up button for me. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. If you haven't already, make sure that you check out our Discord group. It's getting pretty active in there, so make sure you scroll down below, check out the Discord. So the first stock that I want to talk about is SNAP. That's Snap Snack Inc. Snapchat. Is anybody still using Snapchat? I don't know. But right now, Snapchat is trading at $38.91. So I'm going to be bearish on Snapchat because if you look at the stock chart, you'll see that overall it's been in a downtrend. Now we're in earnings season. This is earnings season right now. And you'll see that they had a huge price increase because they had a pretty decent earnings report. Was that just excitement for earnings? So it's just kind of anticipating the stock chart having a short-term reversal after such a strong price move up. And if you'll kind of see, the RSI is a little bit high for the pattern that we've been in. So just reaching around 50, drop here, around 50, drop here, around 50, drop. Well, another thing that I like is, as far as for bearish, is the MACD indicator. It looks like it's kind of cooling down, and these histograms look like they could start moving down and actually into the red. So that's just kind of something I'm anticipating for Snap. Now, as far as an entry signal, an entry price for the stock, I would need to see, if I was going to do something bearish, I would really want to see the stock move downwards to at least about $37.50, around that area, because this is the support from Friday, so that would be a good indication that it's kind of starting to move downwards, and it's moving out of that uptrend that we had last week after earnings. So that's kind of something that I would anticipate for that. Now, looking at the options, not crazy prices, they're not crazy. I want you to notice how high the implied volatility is, 141%. That's huge. With this one, I would say either you can do a long put position if it does start moving in the downward direction, but another thing that would probably be safer around earnings and just anticipating this implied volatility crush, which is just the implied volatility dropping significantly. 100 is high for that. So you can do a credit receiving position like a call credit spread. Call credit spread is still going to be bearish. It's just going to be a premium receiving position. So the first position would be a put. So make sure that we're in the puts, and I'm going to do something not too far away. It's going to be a February 18th put, and I'm going to pick the $40 strike price. So if you see here, it's a little bit up there. Actually, that's another reason why I wanted to do the credit spread, because it's a little up there. So, you know, this is gonna cost a little piece. So it's going to be about almost $400 for this. But if you were interested in doing the credit receiving position, this would be the call credit spread. So make sure we're in the calls. And so this one is going to be pretty straightforward. I like it because of the high volume and the high open interest. Make sure it says sell for credit, and we're going to sell the 39 call strike price, and then we're going to sell the 40. So this is going to be a credit. And if you'll see here, kind of like this one, the most that we can make with this is $45, and the most that we can lose is $55. I know that's a lot. That's kind of a lot. It's a little more than a 1-to-1 ratio of a win to loss, but it's just kind of something that you can do pretty quickly if you see the stock moving in that direction, and you're going to receive credit for this one. Okay. And the next stock is F. So this is Ford, and Ford is currently trading at $17.96 right now. So this position is actually going to be more bullish, but this is going to be very short term. And the reason why I say that is because you'll see that Ford is in a downtrend right now. But something that is interesting is we actually just moved up to the 50-day moving average last week. So that's this white line. And we've actually continued moving downward after the earnings. So I had 2 positions for this. So you can either do a very short term bullish position anticipating this stock moving up, or one after earnings. You can anticipate it continuing in that trend, which is probably the safer thing to do, going with the trend. As far as an entry and anticipate a quick short move upwards, I would have my entry around $18.50. So it's not too far off from where we are right now, but if you started to see it move past it, then that would obviously be a good indication that we've moved out of that downtrend that we were in on Friday after earnings. So I would have my entry at $17 $2.50 for the put. First, for the short-term call position, I would want to do something not too far away. So this one is actually going to be a February 25th expiration date, and I would pick the $18 call because of such a high volume, 4,000 volume, 300 open interest. That's a really good indication that this is a very popular stock on Friday, or option on Friday. So that's a good one. It has a very close bid-ask spread. So this is kind of something that you can do. It's it's not a very expensive option. So that's something. Now, as far as the bearish play, so if you just wanted to get into something long-term, the put, anticipating it continuing that, then I'm going to move out a little bit further, and I'm actually going to pick the March 18th. So this is going to be something that'll probably be a little bit, something a little bit longer term. I would go for the $20 strike because of 50,000 open interest, almost 2.5 thousand volume, not bad. So that's something that you can do. Tight bid ask on that one, $250. That's not that bad. So you can either have a short bullish position, or you can have a long-term bearish position for forward, and that's something that you can kind of do for that. All right, and the last stock that we're going to talk about is AMD. That's Advanced Micro Devices. Going to be another bearish position just because they had huge run up in price around their earnings, but we've been in a downtrend for a while. We just moved up past the 50-day moving average. So is it going to continue in that overall downtrend? Can we anticipate that? Or after such a good earnings, is it going to start to move up and change trend direction? So the RSI is a little bit high for this. It's a little neutral with the ADX indicator. So for me, if I was going to be bearish on AMD, I would have my entry around 120 to 118. So you could say 120, but it would really be 118 for the, for a definite. The options for AMD are a little bit up there. So you'll see $700, $1,100 for options for this. So for this one, I'm actually going to do something that's going to be a little bit cheaper for options, and it's going to be a debit spread. It's actually going to be a put debit spread because I'm overall bearish on this one. So I would do the put debit spread. So this is still going to be a position that you're going to pay the premium to get into. It's just going to be cheaper. So make sure in the vertical, in the puts, and I'm actually going to sell the 105 strike. I'm going to sell the 105 put strike and then buy the 110. All right. And so on this one, you see that instead of paying $600, $500, $700 for this option contract, you're actually paying $25. So that's not terrible to get into this. This is good. The most you can make with this is $475, but the most you can lose is $25. I'm in that. So yeah, I like this one. This is a cute move here. So that is something that you can do with that. And with that being said, we're going to go ahead and wrap this up. Make sure you guys check out the video that we posted on breakout trades. Okay. So this is the most recent video that we've done on one of my favorite top strategies right now. Check out that pressure, and I'll catch you guys on the next video. Okay.